the impact of Bitcoin on the world economy is very similar to, the impact of, say, the Industrial Revolution of the late, the post-Civil War kind of era in America. It's going to be enormous, and I think it will get adopted, and it doesn't need, it really doesn't need. It doesn't need to. It's not a payment system. It's just like you just got to believe. You got to understand that it's not a payment system. What matters is we've got a new form of money that is being deployed worldwide. That's 15 years old, and it's $1 trillion in value right now. And you do not want to miss this thing.
Despite being only 15 years old, Bitcoin has already achieved a market value of $1 trillion. That said, Bitcoin maximalist and mathematician Fred Krueger views Bitcoin as more than just a payment system. He sees it becoming a new kind of global currency. According to him, it's important to not miss out on this financial innovation. Worrying about its competitors is meaningless. He believes Bitcoin will have a profound global impact as its adoption grows, with increasing interest from financial institutions signaling that this future is becoming more likely. Let us now view clips of Fred Krueger's interview. Give this video a like to show your support and subscribe for your daily dose of crypto news. We hope you enjoy.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
This is a really important graph, right? I think this is one of Giovanni's best ways of debunking the kind of supply model. Everybody thinks that supply, it's all about supply. It's not about supply, right? And Giovanni just points it out perfectly here, where he says, look, let's just take available supply, we'll just call it available supply, which is sort of total supply minus, illiquid supply, right? That's sort of the supply that's moved around a lot, well, relatively recently, let's say within a year. And let's look at price relative to relative supply. Well, there's no correlation, right? It's just random, right? So clearly these things are not one determines the other. And I think, it's not to say supply scarcity doesn't matter. What he's trying to say is that the available supply is not a mathematical driver of Bitcoin price. It's just not. I think by saying scarcity doesn't matter, he's actually infuriated a lot of people. Yeah. Ken, okay, this is good. Are new addresses an indication of adoption, or is this look? I think it is, and it really is an indication of adoption. Let me just stop the sharing. Why do I think it is an indication of adoption? Well, if you told me just new addresses with dust in them, I would say absolutely not, right? Because I create these new addresses all the time, right? And I'm pretty active on Bitcoin. I actually use it quite a bit for a bunch of things. But let's just say rarely, every single day I'm doing some kind of Bitcoin transaction or multiple ones. And I'm creating a lot of new addresses all the time. But what I'm not doing is creating a lot of new addresses with one Bitcoin in them, right? And so you see this pattern of new addresses with one Bitcoin in them, new addresses with $1,000 in them, new addresses with 0.1 Bitcoin in them, new addresses with 10 Bitcoin in them. All of these things are growing up and to the right with the power law. So yeah, so I do think that I think addresses are a good proxy for user growth. I don't think it's the total thing. Yeah, so Tom Young completely agrees. Supply has been static for the most part because mining is small. So that's one of the things I put in that document too, which is let's look at mining right now. Mining at this point, in all of 2025, you're going to have 0.78% of the supply of Bitcoin that's going to be mined. it's not significant. It's 1% of Bitcoin supply is going to be mined. You know, you know, the Mt. Gox. So 1% of Bitcoin supply is 210,000 coins, right? So is Mt. Gox supply 210,000 coins? Not quite. You know, it's 140,000 coins. But my point is, the Mt. Gox supply, right, which you could sort of argue is coming onto the market, right, is about 3/4 of a year or 2/3 of a year of next year. That's how big it is, right? So neither of these things is that important. The Mt. Gox nor the entire supply that's going to be mined in 2025. It doesn't matter. These are not significant. You know, we could get more people like Michael Dell who want to come in and start buying. So I don't think that these things are that important anymore. Now, they were very important back in, you know, the halving of 2012, right? That was a pretty big halving, but not so much anymore. So I don't, you know, I don't think supply makes much of a difference.
Fred Krueger agrees with Giovanni's conclusion that while scarcity is important, the available supply is not a direct mathematical driver of Bitcoin's price. Regarding Bitcoin mining and its impact on supply, Krueger argues that mining now has a minimal effect on overall supply. He explains that by 2025, only 0.78% of Bitcoin's total supply will be mined, which he considers insignificant. He also views the release of Bitcoin from Mt. Gox, totaling about 140,000 coins, as inconsequential compared to the annual mining output. Krueger concludes that neither mining nor the Mt. Gox release significantly affects Bitcoin's market dynamics today, unlike the substantial impact mining had in earlier years, such as during the 2012 halving. Now let's hear more of Fred Krueger's insights.
To me, I think the impact of Bitcoin on the world economy is very similar to, you know, the impact of, say, the Industrial Revolution of the late, you know, the post-Civil War kind of era in America. You know, it's going to be enormous because I think, I just think it's going to be enormous, and I think it will get adopted, and it doesn't need, it really doesn't need. It doesn't need to. It's not a payment system. You know, it's just like you just got to believe. You got to understand that it's not a payment system, and once you understand that it's not a payment system, you stop freaking out about, you know, whether it's going to compete with Facebook or Ton or Solana or anything like that. Those don't matter. Essentially, they don't matter, right? What matters is we've got a new form of money that is being deployed worldwide. That's 15 years old, and it's $1 trillion in value right now. And you do not want to miss this thing. It's sort of, and by the way, it's really interesting in this Andrew Mellon period. There was like crises and panics all the time. You know, there's the big bank panic of 1907, but there was a big one in the 1890s. I think it was 1893 or something. It was just like every bank in Pittsburgh went bust except for Andrew Mellon's bank. So there was huge volatility and booms and busts 100 years ago, just like there are today. You know, just they're the Sam Bankman-Frieds of the late 19th century, early 20th century. You know, these guys were out there in space. And it's really interesting. You know, Andrew Mellon became Secretary of the Treasury during the 20s. And a lot of the prosperity that America enjoyed in the 1920s is really because of Andrew Mellon, because he kept interest rates low. He cut the debt dramatically. So it's possible for a country like the U.S. to really get its act together and do very well. So I wouldn't be too bearish on the U.S. is going to go. The U.S. can change. You don't want to do your own custody of Bitcoin. I don't think that makes sense. You can own the ETF just like anybody else. And since you own 6%, Kuwait owns 6% of BlackRock, they should buy a very significant position in BlackRock's best new product, IBIT, So I think if you have any pull in anybody who knows the sovereign wealth fund people, I think that Kuwait should absolutely, if they're not already doing it, they should absolutely start. Is Wall Street laughing at Bitcoin, or they're taking it more seriously? Yeah, I just don't think they're really taking it that seriously, is my opinion. And I'm supposed to have a debate with Jim Bianco tomorrow. He's a very old Wall Streeter, about the same vintage as me, but he kind of kept doing it. I got out and started building companies and stuff. I think we probably started about the same time. But yeah, I think they're just sort of hedging their bets. They're buying a little bit of it. But they're making Wall Street, to me, is a very productized thing right now. That I just had dinner with a former French Wall Streeter. Kind of climbed the French pyramid at Credit Lyonnais, and he was like, it's like product. It becomes productized. So they do A fund, B fund, right? You do the Bitcoin fund, you do the ETH fund, you do the Solana. You don't care, right? They're just in the business of kind of packaging dog food and selling it to the dogs. They don't really have a view. The days of real swashbuckler pirate, arb traders is kind of gone as far as I could see. Michael Howell. Michael Howell. Okay. I will check out Michael Howell, former research director of Salomon Brothers. I got to check him out. I don't know the name. Global liquidity. Yeah, look, global liquidity is definitely a thing. And I think, it's very interesting that we are at, in terms of rate cuts, right? I saw that I posted this, retweeted it, that we're at the absolute low of the rate cut cycle, and we are about to go into rate cuts in the next 12 months. And it's just as clear as night and day to me. It's the Fed's going to cut, the ECB is going to cut, China's pumping, everybody's going to be supplying liquidity. And so I think liquidity is a driver, and I'm a big believer in that. And I definitely think, I definitely think it'll be very positive, especially in the context of a new president. So I think, I could be completely wrong, but I think Trump's going to make it in. And I think we're going to have rate cuts. So that's kind of my general view.
Fred Krueger argues that individual custody of Bitcoin might not be practical for everyone. In such cases, investing in Bitcoin ETFs, like the iShares Bitcoin Trust from BlackRock, would be a better option. He suggests that Kuwait, which owns 6% of BlackRock, should consider taking a significant position in this new product to leverage their stake for greater potential returns. Krueger also stresses the importance of global liquidity, and predicts that major central banks, including the Federal Reserve and the European Central Bank, will cut interest rates within the next year. He believes this increase in liquidity will positively impact the economy, especially with the potential of a new presidential administration in the United States. Krueger personally thinks Donald Trump will win the next presidential election and expects that this outcome, combined with rate cuts, will drive economic growth. What are your thoughts on Fred Krueger's perspectives on Bitcoin custody, ETF investments, and the potential economic impact of global liquidity and political changes? Share your thoughts in the comments section below, and continue the discussion. If you found value in this video, don't forget to give us a thumbs up, and subscribe to our channel for your daily dose of crypto news. Thanks for watching. We hope to see you again. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.